Bradshaw with Bradshaw Financial Planning, and thank you for joining us for Mind Your Money, week ending June 14th, 2019. I wanted to come back and give you a mid-month update because we've got some key dates coming forward, but let's jump over to the agenda real quick. How important are the next couple of weeks in regards to the market and also the economy? That's one. The second subject that we'll talk about is individual investor sentiment. Is there a lot of fear out there? Is there a lot of optimism? We'll take a look. Third, we're going to look at our portfolio changes and also the indicators. All right, well, let's jump back and let's talk about the next few weeks and events that are coming up. The FOMC meeting is scheduled for June 18th and 19th, and at 2:15 p.m. on the 19th, we're going to find out whether the FOMC, Chairman Powell and the other Federal Reserve members are going to cut rates or not. The probability of that occurring is only about 23.3%, so it's not likely, but why is it important? Because on June the 4th, the Federal Reserve basically came out and said that they were going to backstop the economy. If they start to see data slowing, they're willing to come in, cut rates, produce some more liquidity for the overall corporations and the economy as a whole, and hopefully get the economy to continue to grow. Maybe not at a fast pace, but at least a slow and gradual pace. Secondly, the G20 meeting is coming up at the end of the month, June 28th and 29th in Osaka, Japan. It's the Leader Summit. We're going to have many of the leaders around the world coming in. Ultimately, the key point of that whole G20 meeting is the side meeting that could occur between the Chinese government and also the U.S. government in regards to the trade and trade wars that are currently in place right now. There's a lot of concern associated with tariffs, and it would be great to have some positive news come out of this meeting. I don't expect to get a trade deal between the two countries, but we at least need to see progress. That's what the market's looking for. If we don't get some type of positive rhetoric out of there, it's going to be a while till we get another Federal Reserve meeting to potentially cut rates to help backstop the economy at this point. That next meeting is my third point. That's July 30th and 31st. So there's a wide period of time, 4 to 5 weeks, between that G20 meeting and when the FOMC would meet again in regards to interest rates. So we need to see something positive come out of the G20 meeting. The last thing, we'll talk about earnings. Earnings coming in for the second quarter of 2019 will begin to be reported in July of 2019. We're expecting, or the analysts out there are expecting, negative 2.5% growth year over year. This would be the second straight consecutive quarter since 2016 that we've had negative year-over-year growth. So again, that may be additional fuel that the Federal Reserve needs in order to cut interest rates and produce some more liquidity into the system. All right, let's change gears. Let's go over to the individual investor sentiment. Take a look at the Fear and Greed Index. Currently, we're sitting at the end of the week 38 on that reading, which is fear. But you'll see the last month has basically been in that same range. There hasn't been a lot of adjustment. This is a contrarian indicator. So if we have fear in the individual investor, normally that can mean good things for the market going forward. So it's a contrarian indicator. Hopefully the market will move north based on this data. The last thing we want to talk about is portfolio changes. This past week, the indicators went from negative to positive on the short term, positive on the midterm, and then positive on the long term too. For that particular change, we moved more back into equities, and right now we're not fully allocated, but we do have more exposure to stocks at this point. We're definitely hoping for positive news coming out of the Fed this coming week, some positive news coming out of the G20, and hopefully that'll spark the market to continue to go up. But we're nimble. If that comes out negative, indicators change, we'll be back with an update in regards to that. Our normal quarterly reallocations are coming up on the first week in July. We'll definitely be back with updates in regards to that. I want to thank you for joining us today for Mind Your Money and Market Update. And if you got any questions, feel free to give us a call, shoot us an email. Please join us on social media so we can send these updates to you constantly throughout the week. Again, this is Trent Bradshaw with Bradshaw Financial Planning. I hope you have a wonderful week. Look forward to speaking with you soon.